When it comes to dividend stock, they're ideal for individuals who are getting ready to retire or that are recently retired. This can supplement the 9 to 5 paycheck you're no longer going to be receiving. It is also a very good supplement when it comes to Social Security and being able to generate income. Now, of course, with dividend stocks, you have to be very cautious. They are and do tend to be a little less risky than a regular stock, but overall, when it comes to dividends, they can provide a very passive stream of income that is very valuable when it comes to cash flow management during retirement. But of course, like I was saying, there is a downside to this. When you look at an individual stock, I personally do not own individual stocks because of the risk with share prices that can drop. You can see it underperform the market. You can also see a single dividend stock that might drag down your portfolio. It could cut dividends. It could halt dividends. There could be tiny annual dividend hikes or no dividend hikes at all. Or if the company is underperforming, you could see dividends stop in their entirety. Now, this is where ETFs come in. Now, for me, ETFs are where it's at, guys. I do not invest into any individual stocks at all. Everything that I carry in my portfolio is ETFs and ETFs only. You might be asking yourself, what is an ETF? It is an exchange traded fund, and it is a basket of dividend stocks or stocks themselves held into a fund to create diversification, reduce the risk, without sacrificing a ton of yield. So in today's video, we're going to be looking at 3 dividend ETFs that are perfect for income generation with retirees, starting with number 1, which is the Vanguard High Dividend Yield ETF. Now, this is one that we've actually covered before. Ticker symbol for this is VYM. It focuses on large, well-established companies that have grown and paid a generous dividend in the past. With the flip side of that high payoff, some of the companies are not very strong when it comes to the profitability and the growth factor because this is focused on income. This is focused on cash flow. Now, earnings are rising about 7% annually in this ETF. Dividend yield is 2.8%, which today, that is about double the rate of the S&P 500, which we know is the VOO, which is the 500 largest companies within the United States. So if you're looking to generate income on a regular basis while getting some growth out of there, this ETF is perfect for you. Now, retirees who buy this ETF will get exposure to a lot of stocks, different industries, and they are a majority of the companies that you know and love, which is why the yields aren't as high as they could be, but we're not looking to really get too risky with this one. Now, some of the top holdings include ExxonMobil, Procter & Gamble, Walmart, and it has a very low expense ratio, which is super important to me, making sure the expense ratio is very, very low. This one comes in at a 0.05, which the industry average, or looking at the comparable peers, is at a 0.25. And we know traditionally the Vanguard funds are very low when it comes to the expense ratio, and they do cover and hold a lot of different ETFs. Now, before we get into the next one, go ahead and subscribe to the channel, give it a thumbs up. Let me know in the comments what you think about dividend ETFs in general, and let's get on to number 2. Number 2, we have my personal favorite, which is our Schwab US Dividend Equity ETF. That is right, the Schwab US Dividend ETF, ticket symbol SCHD, has a very similar focus than we've seen in our last ETF, but it differs and it is a little bit different than the Vanguard counterpart. It has fewer stocks, but it has a much higher yield, which is really different. So members of the Dow Dividend 100 Index, it really holds some of the largest holdings include Chevron and Verizon Communications, which both pay a yield well over 4%. So again, you're getting a pretty good return on this one. The focus of this ETF is meant to pay an overall higher yield, which is at a 3.5 currently. Could go much higher, but that is kind of where it's sitting right now. On the downside, you do pay a little bit more in the expense ratio. It is a 0.06 versus a 0.05 that we've seen with the Vanguard fund just a moment ago. Now, as you might expect, this fund has actually underperformed the market because of the tech rally. When you look at the rise of artificial intelligence, when you look at NVIDIA, when you look at some of the larger tech companies that have literally exploded with the rise of artificial intelligence, most of them are not paying a very big dividend, which means they are not included within the SCHD. Now, the ETF shares overall are up 14% in the last 12 months. So you are seeing not only a pretty good return at that 3.5%, but you're also seeing a 14% appreciation with the ETF in comparison to the S&P 500, which we know is almost up 30%, which is kind of crazy. But the big thing with this is kind of mitigating and spreading out the risk because in a downturn, when a market is down, really this has a lot more of a defensive holding, meaning that where the S&P 500 might be down 22%, you would see this not down as much because of the stability of the companies that are paying ETFs. Now, the final one we look at is the Vanguard Total Stock Market ETF. Now, overall, this has a little bit of a lower yield, but the diversification is really the key to this one. Now, this fund gives you exposure to the entire US market. This includes everything, guys. It is the large, it is the mid cap, it is the small cap. Now, you get a decent yield of a 1.3% immediately, which matching the yield is more focused around like the S&P 500, and the growth very similar when it comes to that yield. Now, of course, this ETF does give you a lot more exposure to all of our growth stocks, as evidenced by the top holding, which includes all of the Magnificent Seven stocks. A retiree wouldn't want to really put a bunch of percentages or big part of allocation into the portfolio looking at this ETF. However, it does still have a pretty good focus on the growth aspect while giving you a pretty good yield. Now, of course, as part of a diversified portfolio, this holds funds, it holds bonds, it holds cash. Vanguard Total Stock Market can play a role in providing the market matching returns while giving income, which is really big. Now, out of these three, when it comes to retirement, my personal choice would be the Charles Schwab, the SCHD, guys, which we have talked about before. This, of course, is a really, really strong, well-managed fund, overall offering that 3.5% return, which again, knowing that right now, high yield savings, 5%, you're seeing CDs at 5.25%, maybe 5.5% on CDs, getting a 3.5% yield, but you also have to compile on that the 14% that this ETF is up in the last 12 months, which again, not only are you seeing the regular paycheck quarterly, which I do have part of my portfolio in the SCHD as the kind of income generator, which allows me to essentially stack money up every single quarter because we have all of our dividends reinvested into the SCHD, which again can grow it much further. There's going to be a point within my portfolio where we do get into retirement, where income is going to be an issue and supplementing that income is going to be important. But at that point, I'm hoping that the SCHD has grown to the point that I have the ability to take out a lot of the dividends that are coming out of this fund, well, seeing some pretty solid growth out of there. Super excited about this one. And again, the SCHD would be my choice to purchase out of three. Now, for a majority of retirees, these are perfect as a supplement to income. And again, when you start getting exponential numbers in here, so when we start looking at 100,000, 500,000, $1 million in here, it's going to be incredible how much return you're actually seeing within these ETFs while getting growth and seeing the mitigation because it is invested into the market and not into one specific stock. All right, guys, so that is going to do it for our video today. 3 dividend ETFs that are perfect as you're getting for income and retirees. So let me know in the comments what you guys think, and I'll catch you in the next video.